Okay, guys. So let's talk about something. So firstly, let's review today's trade. So we had CPI today on Euro USD. Um, and let's just say that I've been having some problems with executing the 7 to 11 time window. So basically, when I was backtesting, I didn't really pay attention to the news. And I realized that, for example, this week we had almost every single day a news event at 8:30. And then I was like, what do I do? Basically, because when I'm looking for my setup, I cannot actually just like hold the trade through that news because even though most of the times it plays out in my favor, sometimes it can just go opposite way and actually like fuck up my account. So I can lose way more that I intend to. So I was kind of like I was not sure what to do regarding that because how do I trade when I have news at 8:30? What do I do? Do I try to take a trade before that? Do I execute after that? What do I do? So I found something. I reviewed the whole. So I basically went back to this backtesting session, and I reviewed every single trade of these, once every single trade of this session, and I watched out for news like this, and I went how and what I did and how everything played out. So I figured out some key things that I'm gonna share later today. So let me firstly go ahead and review today's trade. I mean, not the trade, I didn't take any trades today, but today's session. So firstly, um, we got a move up from the from EURUSD, so now we are bullish because we disrespected this daily fair value gap. So for this particular day, we were bullish, but also remember that we have this daily fair value gap right here, which is right in the in premium of this move, meaning that price could go lower from here. So basically we are now in the middle of two PD areas that price can go somewhere from. Basically it can go higher, it can go lower. We'll see what happens in the end, but for now we are sure that today we can be bullish from first, then lower later. So let's go to the 4-hour time frame. So here we can see that we have all of these relative equal highs right here, and we have this 4-hour fair value gap right here. Okay, and this will be my drawn liquidity when starting at 7 because it's so clean, it's too much highs. Price should go ahead and take that. So let me just replay this and let me actually go about trading this. So we wait for 7 right here, and we see that we have this 1-hour sell side, and we have this 1-hour buy side right here. So okay, that's all that we have here. Let's drop to the 15-minute time frame. So here, okay, let me just fix this, put it to the right side. So this is really a banger trade. This is going to be a lot of value that I just discovered, and I'm going to apply it to my own and actually update you guys on this. And the good thing is that not many people will watch this, so they won't know this, even though they can use it. So we can see that right here, if we put up this indicator, we can see that this is a London low. So this is how I go about trading every day. Mark out these, mark out that this is also a London high, and later we will mark out that this is also a high today. So London low, London high, Asia has been taken out, so we don't look at it. And then we can actually put a line like this and say 0, 0, 0, 0, and just mark out. So this would be the high of the day, this would be the low of the day right here. So let's just mark out that also. Okay, so this is the low of the day. So now at 7 we are waiting for price to do something. So let's remove this. We can expect price, so let's mark out. We have this 15-minute fair value gap, and we have this 15-minute fair value gap. The price just reached into. So let's see what price does next. So remember, at 8:30 we have CPI. So let me mark out that. Let's do news. Okay, so price decides to go lower, and price flips a key liquidity right here. Remember, we are bullish because we closed above the daily fair value gap. So we can drop to the 2-minute time frame and look for a setup right here. So here we see a push up, but we don't actually see any break of structure. So we don't see a possible for break of structure, but we can use maybe this as an inversion. I'm not sure. I don't trade inversions. So let's drop to the 1-minute time frame and let's see what we have there. So here we see a break of structure right here. So this low is a break of structure for me. And now we have a first fair value gap right here. That's also an entry, but we can wait and see what price does next. So price decides to push up and leave this fair value gap. So this can be our first entry right here. This would be probably my entry, or you can take this tool and mark out the low and the high of the range and actually see that the fair value gap is this one is in premium, I mean in discount of this move, meaning that this can be a good entry. This can be the best entry that you can take. This one is a little bit more risky, so let's do both. Let's first place this one here. The stop would be 3.5 probably, just below the low, and you can target a 3R. And then with this one you can place the trade here and still put the same below this 5.5, and you can also target 3R. So this right here is the draw liquidity. So we have enough space to target 3R, and we also, so this draw liquidity and a daily fair value gap is in itself a draw liquidity. So let's see how this plays out. So you get filled in right here. Now the thing with this the thing with these trades is that I would not take them because they are very close to this CPI, and we do not like to be in such volatile trades. So at this point I'll probably put my stop to break even on both of the trades, or because it's CPI, just close the trade in profit right here, right before it. So basically on this candle close, basically you get some, so here you get on this trade you get almost a 2R, you get a 2R, okay, so that's good, that's 2%, and on this one you get 1%, that's good. You can close that, or you can decide to stick through it and hope that something happens in your favor like it did in mine. So most of the time news play out in my favor, but I'm not gonna risk that because I can lose my whole account on one trade. So basically you let this play out, for example, or you close these in just before the CPI for some small profit, or you put your stop to break even. But I think that sometimes these news can actually push through your stop loss at break even and actually make you lose money. So I think the best thing to do is definitely close it a bit earlier, so maybe at 2 minutes earlier than the news event. But then what I figured out, why did I mark 9 o'clock? So with CPI, what I've noticed is that CPI usually goes somewhere, doesn't matter where, and sweeps some liquidity. After that, it gives a trade in the opposite direction, and it does it after 9 o'clock. So let's look at this. Let's look at the 50-minute. So we have just swept these 4-hour relative equal highs, and we are inside of a daily fair value gap. Now we know that we can get actually some sells. Okay, so let's drop to the 2-minute time frame, because now we don't want to be chopped out around on the 1-minute time frame. We need to have a clear entry. So we can see price go here. So this would be the high of the data highs, but we don't need that. We have a sweep of liquidity, we have a daily fair value gap, so we have everything. We just need a break structure and a fair value gap. In this case, let's see what price does. So here comes 9. Okay, that's good. We can see the price created a break structure right here. This is our swing low, and we have a fair value gap that's clean. The only thing you need is this fair value gap. So clean one fair value gap, entry on that fair value gap. Stop can be at the high right here, or above this third candle, which is the break, which is the order block. So I will keep it at here at 10 pips, and then you can target 3R right here, Or the best thing that you can do is actually keep the swing, the stop loss just above the high, the recent high, because we are in a volatile state of the market. The news just happened and there's a lot of wicks and everything, so what could happen is basically price stops you out and then goes to a target. So we don't want that. We need a short trade. So then you can put your TP at 3R if your stop is safe. This is the safest stop that you can use. Okay, maybe the safe one will be above the high news, but that will be too large. So this one is the best that you can do. So basically these are also a key liquidity right here. So data lows also, so you are safe with this trade. Now let's see how does it play out. So as you can see, it safely reaches your target. Very nice trade right here. Boom. So it's very good trade. And let's see if you would be safe at 10 pips. Probably spread will take you out on this one. But yeah, this would be the safest option right here. So this is a very good trade. So this is basically how this would be the trade that I would take if I was trading today. I couldn't because I wasn't at home, but this is what I found out. So let me pull up some more examples of this. Wait a second. So we had this one today, and then, for example, this one. So right here, this is CPI. It goes higher, sweeps this, buys liquidity right here. So this is from the backtesting session, and then after 9 o'clock, which is around somewhere here, it sweeps liquidity right here and then creates a breakout structure with a fair value gap right here. This is your entry. You can target the 3R, put your stop above that high that has taken out the swing high or the buy liquidity, and then you are safe. Let's do another one. Just let me find it. So let's do another one. Okay, this was PPI. Okay, this was not. Let's see. Okay, so this is another good example right here. So we can see, ignore this. This was the daily fair value gap, meaning that we are bearish. So at 8:30, price goes up and sweeps liquidity, and then after 9, you can start looking for any break structure with a fair value gap. So here, as you can see, we did not get any clear break structure, meaning that these are not an entry. And after 9, price decides to push lower below this low, give you a break structure and a small fair value gap, which is enough for you to take. Just be safe with your stop because we are in a volatile environment. And then, as you can see, price plays out again. Remember, this is all CPI after 9, entry after 9. So yeah, let's look at another example if I do have it. Yeah, this is another example. So this is in the backtesting session. I took a loss here because I wasn't paying attention at the news. This should not have been a trade because it was exactly at 8:30. I mean, the entry happened at 8:24, which is not good. So basically this fair value gap. But as you can see, CPI plays out, goes up, takes out these liquidities below on the left, and then you wait at 9. So you don't trade any of these moves down or this one. You wait for 9 o'clock. And then at 9 o'clock, you can see that price has already swept the data highs and the daily lows are left intact. Meaning that after 9 o'clock, you can see price pulling down, creating a break of structure with a fair value gap on which you can enter, and you can safely target the data lows or just the 3R like I do here. So yeah, that's basically what I found out and what I'm going to be implementing definitely. So let me give you some tips. I think that all the traders who actually don't deserve this knowledge have left the video. It's been 40 minutes, so yeah. To the ones that you are here actually, I want to share something with you that will actually help you trade this time frame, 7 to 11. and it's this simple this simple how would I say it, checklist, not a checklist, but yeah. So basically, if you have CPI, most likely to sweep something and then after 9 o'clock give you an entry in the opposite direction. Remember, every single time that I'm talking here, it's the New York time zone, so basically Eastern Standard Time. If it's major news like CPI, PPI, PMI, NFP, and I'm in a trade, close before 8:30. Okay. If it's small news events, feel free to hold through them. So those that don't move the market that much. There's an example here. So yes, for example, jobs opening and trades. Basically, those you can see with experience which markets move, which markets don't. But basically, you need to avoid these. So if it's everything else, you can trade it. If it's these news, don't trade it. Okay. So I didn't say FOMC, even though it's a major one, but FOMC is at 8 p.m. on a Friday usually, so it doesn't affect us here. Yeah. If we have 3 red followers news within a half an hour, wait for all of them to play out and then search for a trade. So basically this was an example where we had news at 8:30, 8:45 and 8:15. So basically with that you just wait for everything to play out and then search for entry, because you would be very like fucked up if you traded through these 3 news events within half an hour. And then for lastly, if for example price flips liquidity and bias is in my direction and a small news like core retail happens, for example, that's also small news, and creates my model break structure and fair value gap with its volatility, then feel free to take a trade there. So basically what I'm talking about is, let's say that we have a scenario like this, okay, and this can be looked as a buy sell liquidity right here. So this is buy sell liquidity, and then price sweeps that liquidity before 8:30. So let's say that this is so let's say that this is 8:30 and price sweeps it before that. So this is a sweep of liquidity, and then at 8:30 price decides to create a big move down, and it actually, so let's say that this happened like this, and with 8:30 it creates a breakout structure right here, and here you have, let's say, 2-minute fair value gaps. What you can do, and let's say that this right here happened like this, and then this is a sell side liquidity pool. So with this here you can actually just, so this rather be a large move lower, but what you can do is take this tool and just enter on the FVG in the premium of this move for this example right here, and you can actually trade this. I don't know why this tool is like this, but take a sell right there and target that or 3R. So that's basically all of these key things explained to help you in your trading and to improve if you are trading the 7 to 11 time frame, which for me is way better than 9:30 to 11, because I believe that 9:30 to 11 doesn't really work well with forex. So yeah, this is what I'm going to be doing, and I hope that this also helps you and we can progress together and make some money in this year. Thank you for watching.